Hey, Mike, how are you?
I'm doing great. You?
Good, good, good. I wish I had that whiteboard, but I guess people just have to hear us talk instead of see me make some really bad pictures that I do sometimes. So I guess, when we think about media buying as a whole, it's such a broad spectrum. You can get tactical, you can get granular. I want to focus maybe a little bit more upstream and around some of the, if you would, like foundational principles of media buying. And as we go upstream on that, like the first question that comes to mind, and I was hearing Susan and Denise and everyone just talk, is about the importance of being in market. Like we've done some sessions last year. We were on a panel with ARF. They said for every quarter you're dark, it takes 5 more quarters for you to regain the share of voice that you lost. Our data showed over the past couple of years the past year, that as clients, those clients that went off have been struggling to gain market share back quite a bit. And it's tough in uncertain times. We had the pandemic, we had a bunch of social unrest. Things are evolving. Like, what is your Danone's take on just being live as a whole in uncertain times?
Yeah, totally aligned with that. I mean, it is absolutely critical to maintain sufficient campaign continuity, to drive the business. And I think the key word in there is sufficient. And, oftentimes brands these days, especially with big CPG portfolios, have a lot of budget priorities, and it's important to maintain your media campaigns at the optimal weights, especially during times of disruption. And I think you're absolutely right. I mean, if you start to see, declines in your share of voice, I mean, basically it's like, for every, 10%, gain on share of voice, you should see over a percent gain, or even up to 1.5% gain as a leader in that market. So there's a lot of research out there, as you just cited, that brands with higher share of voice relative to their share of market are going to grow, and those that are below are going to shrink. So that's important in this world where we're all trying to grow. I think, that's obviously the sales side of it, and as many of us are working with brand marketers or product marketers, I think we also have to emphasize that there's not only that short-term impact, but there's also, impact on, brand health. So we've got baseline sales, equity funnels that we're looking at, our brand health trackers, right? And then there's that impact on base velocity and the longer-term impact on incremental sales and profits. So all of that, is easy to forget when you're in the heat of a moment. I would also say, like, just the latest example we had of the big Stop Hate for Profit boycott with Facebook was an example where a lot of marketers might have taken money out. Over 1,000 marketers participated in that, but many of them may not have reallocated those dollars during that time. Maybe 1 month isn't that material for brands that might have long national campaigns, but it could be material for shorter brands, or if that's their peak season. So it's important. I mean, we've seen some really scary headlines, as a country over the last year in particular. This year alone, you look at the Capitol insurrection, you look at the Chauvin trial, and then we had a massive storm hit the South and Texas, and a lot of companies had supply chains disrupted by that. And so all of those, caused disruption and caused some panic, or caused people to want to just turn off paid media. And in those moments, sometimes you have to look to what are your protocols already in place. And then there's some great examples that were even more I'd say controversial in the past. I mean, you think about someone like Colin Kaepernick and the Dream Crazy campaign that Nike put out. I mean, that elicited such massive polarization and backlash from even members of Congress, threatening the company. I mean, if you're an executive in that situation, wouldn't you feel the fear to just turn off the campaign? But in working, I think, through their partners and their agencies, are able to see a lot of that sentiment and that conversation volume shift in real time. And after a couple of days, it kind of balances out. So I think, Gillette had a very similar example with the toxic masculinity case. So, really referring and leaning into some of those partners can give you great guidance to also not pause in the heat of those moments.
Yeah, I think that speaks a lot. Is there's and this past year, uncertainty has been paramount. I think I've done a couple of these, and we've talked previously about pivots and uncertainty, and trying to plan when you don't know what's ahead. And keeping media in market is one of the things that we've seen on some of our brands that are maintaining and gaining voice in this CPG spend that is up year over year. media has been a huge component of that. And it sounds like you're aligned and Danone's kind of run that route too. Can you talk through some of the things, like from a standpoint on your end, or as a leader of a media division or media of a brand, like what is needed? What are some of those fundamental themes across your organization that you need in order to stay in market? Because you have to pivot and you have to adjust, but you need some foundational elements instilled upstream across the organization, I would assume, to enable you to do that. Can you talk through a couple of those themes, and maybe we can go deeper on them as they come up?
Yeah, absolutely. It's, maybe more administrative in nature for folks, but it really is, the operations behind media buying and all the big, glossy campaigns that's important here. So I'd say flexibility financially and also operational agility. Those two keys will really enable us in this really challenging world of a lot of spontaneous unrest at scale to operate and manage our campaigns in a way that will deliver on their goals. Again, I think it's really important that teams, and this was something that we did, last year in preparation for 2021, just anticipating there will be a lot more macro unrest and issues that will disrupt us, whether they're internal or external. As we mentioned a few examples before, Chauvin trial, capital insurrection, supply chain disruptions, all just this year alone. And that's just pretty much, 4 months, right? So it was really important for us to have a readiness mindset and go through some of these flexibility requirements or these operational agility requirements. So, we formed a media issues response team. It's cross-functional. We looked at media more holistically than ever. Consumers don't necessarily know the difference between what's showing up from a paid side of the house versus an influencer with your brand creative versus organic versus even, retail customers who are doing a ton of, advertising on third-party sites and apps. I mean, to them, it all looks like your brand. It's your advertising ultimately as the brand owner. So, we really had to look at, are we able to communicate quickly to all of those stakeholders from below the line, like shopper marketing, all the way up to the big brand campaigns? Do we have visibility into what's in market at any given time? Our agency team has a rolling firm flex report we get, so we know what media is liquid and what has constraints. Like if you own media units, from the upfront process, you can't just quickly do much more than maybe push some of those out a few weeks within the quarter, right? We had to think a little bit more about, not only that internal Marcom to, alert people when there's an issue being monitored, but what are those kind of escalation processes? When are we comfortable pausing with, let's say, organic, but when it gets to a point where we have to pause with paid, what are we going to do if we own some of that inventory or it is more firm? So we've had to look at things like, do we have backup creative that we can rotate in? Like if a brand supply chain's disrupted, we obviously don't want to drive demand to get consumers to go to a store when the product's not on the shelf and piss them off. So we have to think about that from a consumer's perspective and reallocate, that budget. And just, those are some of the key things that we're looking at when we buy media today is how much, agility do we have? Do we have backup plans? With the Stop Hate for Profit boycott, I mean, our team did some really awesome analysis with our analytics group to basically say, hey, look, many of us know Facebook's a top volume or ROI driver for many of our brands. So we don't want to forgo business. Like, how do we find our dual purpose, in this challenge? And so the company's analytics team was awesome in showing, hey, look, these are the other partners that you've invested in that will deliver comparable volume or ROI during the time that you have to shift, for the values that we want to uphold. So I think that is now a part of our standard operating procedure that at any given moment, we have the ability to reallocate within 72 hours. I mean, depends on, that's for a full campaign. I mean, some partners, you can hit a button and pause, or you can update your keywords and block, so, but that's really a very different world than, just backtracking a couple of years ago when YouTube first had headlines for brand safety issues. Many of the world's biggest global advertisers, many of us, I'm talking about my days back at Nestle, had these massive JBPs with them, and they're excellent leaders and partners. But, these were some, platform issues that companies took a stand against and just said, we're not going to invest. And none of us knew at the time how long that was really going to last. And guess what? By the time that ended, we were still sitting on cash in the hopes that we could hit our JBP investment targets, right?
Yeah.
But other people had other ideas what to do when they saw that cash sitting in the budget every month. So finance brand reallocated that. So the brand's campaigns underperformed. I mean, we missed out. YouTube's a great partner for many brands, right? And when brand safety issues resurfaced a couple of years later with them, and there was some serious issues there, we reallocated that money within 48 hours to different partners. And surprisingly, they were new partners and they did exceptionally well. So it's really important that, marketers and brand teams have preparedness through all of those items that we just ticked off in order to be flexible when stuff happens, because it will continue to happen at pace and scale that we've all been dealing with.
Yeah, no, I think the flexibility and agility, loud and clear on that. And some questions that are coming in, so I'm going to ad-lib a little bit on this. Okay. But one of the questions is talking about budget reductions, and sitting in the space, there's pauses, but then there's reductions, right? Yeah. CPG as a whole had a great year last year, right? Where many other industries slowed down, and so now there's a rebound. CPG is expected to kind of keep growing. But margins are getting tighter, and we're seeing the first budgets when margins get tighter because of the PPE required and all of that, operating margins, marketing gets cut. So when budgets get cut, one of the questions is asking is, how have you gotten more, or how's the flexibility been enable you to get more creative in terms of your strategies? Is there certain channels are your efficiency bucket where you're going to maintain reach, or is how do you start prioritizing when budgets get cut, where you need to start reallocating?
Yeah, that becomes a complex situation. It involves a lot of people getting together to do that analysis. And we would say these are financial scenario plans or exercises. They happen all the time in big CPG. So I think there's kind of a muscle memory now that a lot of the agency teams, the partner teams, and the media teams have developed, for good or bad, to deal with this. I think, we have some guiding principles that help us, start those conversations. We try to understand, is there an actual target, that the business is trying to achieve? Maybe there's an initiative that needs more funding that they have to invest in, and they're looking for budgets. You go through kind of an initial checklist to qualify the ask. Sometimes it's really important within big CPG companies to maintain your working to non-working budget ratios, right? So if you have 10 million bucks as a brand, ideally there might be some guidance or benchmark that you have 75% of that in working, campaign dollars, and 25% going into non-working, whether that's, your creative or some work that you're doing on your website, so on and so forth. The second thing we're going to do after we ask for that target is, we're going to ask, can we scrub for non-working? Can we scrub other budgets, right? Like, we love to defend the spend, but we will also obviously collaborate and give the business transparent guidance on where there are dollars that, if we come down to it, hey, look, we still absolutely need to know what options we have if we go and scrub other budgets and we can't, meet whatever that target is that we need to fund some other initiative. Then we go through our firm flex with them at the portfolio level. So we'll say, here's how much money we have by month, by channel, or by partner. We call out what's really at stake. I mean, the context is really important, because then we're talking about stakeholders who are pretty far removed from what's at stake with these campaigns. I mean, we have some brands that are launching entirely new extensions into different categories, or they're restaging and they need to, support, the new pack designs and new positioning with that really heavy awareness driving campaign. And, if that's a big bet, or we've got certain commitments with certain retailers, we need to call out that context for the decision makers to know what the trade-offs are. But we can quickly show them where there's money at the channel level, by partner, by brand, by month, and also forecast what we'd say is kind of that actualization rate. So the timing is super important. Somebody might be looking at data today, but if you as the media owners are not calling out, hey, look, this is the value that we have today, but we know that this is going to decline by 10% or 5% every week, you need to call that out. Otherwise, they might make a decision and come looking for that and make a call. And if you don't deliver that, you're really going to be dealing with some additional headaches. So I think that's really, really important. Another really important guiding principle we have is to maintain sufficiency, right? So we talked about all these other constraints, the context, is there a target? Can we go scrub other budgets first? But ultimately, if it comes down to it, we need to really see what are the campaigns gonna look like after we take this, scenario. And there's lots of ways to visualize that for different stakeholders. Obviously, if you're used to looking at flow charts, you can say, here's the line items that are liquid, or we have flexibility. We can either shift these into different quarters, or we can cut them. We can reallocate them if brands need to. Maybe they ran into creative issues and they got delayed, they can't launch. So, you kind of look into the flow chart view, as well as just, are these dollars delivering the volume or the reach that we need? And if not, we have to call that out. I mean, we have benchmarks for every channel these days for sufficiency. And if we're not at those, that's a big part of the decision that goes into it. In addition to what are the sales that are at risk? I mean, because sometimes, sorry, real quick, last point is somebody might say, hey, look, I've got $1 million that is unallocated today in the workbook, in the budget, but you might know that's going to be put on top of another partner plan that already exists, and you're just waiting to get through some details. And if you were to take that $1 million back, but that campaign partner has worked with you before to deliver a certain ROI, you have to look at it holistically, like, well, what are the sales I'm giving up? Then take away that $1 million, right? Because it's not, for finance folks looking at this quickly, you're not getting $1 million cash to the bottom line if you're cutting media that's a proven ROI driver. You have to look at the net impact, right, of what sales are coming off the table. So going back to our very first topic around, it is so critical to maintain campaign continuity at sufficient levels to drive growth. And if you go below that and just take cash out, you're gonna deplete your share of market. And that's really, really critical for us to call that out too.
Yeah, I think I love that evolution of, like, it's not just important to maintain continuity, but it needs to be at sufficient levels. Oftentimes, you get the flow down effect of, this is how much you have to spend, go spend it. And then as a brand, you're like, well, I want to maintain budget, but like, I'm going to miss all my targets on this front. Like, and you have to be able to be armed with data to have that conversation back up and have organizational alignment on that.
Yeah.
One thing I want to,
all that, by the way, that I just went through, like, we today as a media team, so both internal stakeholders and our agency teams, when these scenarios come up, the expectation is that we can provide that guidance same day, and you're doing that across a very large portfolio. And insofar as you can put some of these guardrails in place, like, here's what the value is as of this date, and we would need a decision from you by this date if you want to take it. Because, you have, like, if you're trying to get out of local TV, you've got to do that with 2 weeks notice, right? Like, you've got to be able to manage stakeholders the way you are going to have to manage the execution or implementation of those shifts or cuts. Like, you need to bake that in to their framework of how they're going to make that decision and make it very clear for them. But that's the last thing. Just, it is super fast these days. You have to move same day on these decisions sometimes.
I mean, speed has never been more important, right? And then the impact of those decisions have ramifications throughout. I think you started off this entire session by saying some of the things you're going to talk about might be perceived as administrative, but they're so fundamental in having that framework set up in order to have the brand be nimble enough to not lose its share and be able to have the right conversations internally. Question that came up, and you mentioned this, there's some new brand packaging and innovation that's coming out. I'm going to put two questions in together that kind of came up is, over the past year, overall, like, spending is up, people's life, day-to-day engagement has totally changed. New channels are emerging, new media consumption is coming up. As you're fighting to stay in market or coming up with plans to stay in market, what new channels have you come out, or are you finding more adapt to do so? And how are you able to maintain strong brand connections while managing the budgets that are there? Like, what role do channels and connections play in this overall ecosystem you've been laying out?
Yeah, I mean, I hear a couple of things in there, so I'll try to address them. No doubt we've seen two major trends in the US, that started last year in March and April. I mean, there's obviously the rise of streaming services at home. I mean, how many partners are out there now with a plus after, not just running 90-second spots at the Super Bowl, Paramount Plus, but every other pitch I feel like I'm getting these days is somebody plus. Not just video streaming, and consumers on average have like 12 streaming subscriptions at home, not just video, but across multiple content genres, if you will. And, there's a lot of churn in this, kind of emerging space. So there's a lot of trial going on, and that means a lot of trial and error opportunities for us as marketers. But the second mega trend that we all observed, right, was the shift to online grocery shopping last year and a massive surge in stock up. Yes. I think, we saw something like 40 million more Americans do online grocery shopping in April of last year alone, year over year. I mean, we had great partners in Google, and they came back and said, hey, look, in your categories, there's been like an 80% daily query surge on average through the month of April, year over year. Like, okay, so like that's really important, super clear data signal. Like there's consumer shifts happening here at scale that we need to adapt to. And the business did extraordinary work to improve its, again, thinking more holistically about its quality scores on Google. And they had an awesome task force that moved at lightning speed to improve those mobile page landing, the mobile landing page quality scores. We started to do a lot more optimization, started to connect a lot more of the data across our various sites into our Google stack in order to really start optimizing some of our paid search media too. So that's a really basic example there. But for us, I mean, one of the things we also really wanted to explore, knowing as many of us do, like there are synergies in media channels that when they're on together, they're a force multiplier, right? I mean, we all know that multi-channel is the best way to drive incremental ROI. And so we look for those force multiplier opportunities. So we did some cool testing at the end of last year in two areas that are kind of here in this convergence that we're talking about. One is a real simple optimization that came up. Like, so a lot of our brands have P&Ls that they try to manage, their budgets within the brand. But we got some under delivery budget back at the end of December. And we said, we don't want to sit on this much cash going into the holidays. I mean, everyone was on break, agency shut down that week. But we had one person who was, willing and able to say, we will reallocate this money, because we said, we've got to invest this money, going back to our very first comment, stay in market. And, we put that money in, but instead of going in at the brand level, and I'm talking about a deal we did with Instacart to ride this wave of consumer demand shifts to online grocery shopping, we put all of that money into Instacart, but instead of doing it at the brand level, we did it at a higher portfolio level. We added some constraints like, hey, don't optimize too much to this brand because it has lower ROIs and we don't want to dilute the returns. But we saw such significant lifts in sales in doing that. And that was just in 5 days. We delivered in full and we saw a huge lift in sales. All of that hits that portfolio P&L as opposed to the brand. So everybody wins as a team still. But when you take that and you forecast it out across the year, if we did the exact same thing at the same tough market constraints, higher costs in Q4, right? We did easily see in the forecast, I have it in an Excel file, shows we would generate more than 10 million plus in retail sales. That's just optimizing the budget one level up. You're not asking finance for more money. You're just saying, give me the authority to shift reasonably with good judgment with the P&L in mind, and we'll generate higher sales. Another awesome test we did was around this convergence of streaming video and online grocery shopping between Kroger and Roku. We did a test to really understand, can we use those deterministic segments from Kroger's loyalty cards, match those up to Roku subscribers, and then target them, and then see what kind of impact we get through their closed loop sales reporting. And so that was really awesome. We had a great partnership with our global team to help us, explore this initiative. One of the big learnings we took away from that is, we were really focused on, hitting sales goals and driving ROAS, right? And this brings up like a real important, topic around optimization, which was, let's just say we had, 4 core segments in there: current buyers, lapsed buyers, competitors, everyone loves a good conquest, right? And then, categories. So we, if we just let that system run, it could auto optimize, or we could put constraints and say, evenly weight that budget, 25%, per each. But one of the key things is if your goal is to drive sales and you stay that way, you're never going to hit that sales target because some of those segments are not going to really respond.
That's right.
But if you're also trying to drive household penetration, you have to suppress those current buyers in that segment and, put all of that 25% that they were getting into the other, new buyer segments, and you would increase household penetration, but your ROAS will go down, right? So there's that scale you need to be mindful of. And that's a real risk in a lot of this work is you have to be mindful still of these fundamentals of, creative dilution, but moreover, too many audience segments and not tying those audiences impression delivery goals against, the campaign goal. I don't know if that helps.
I think all super helpful. One thing that I'm kind of latching onto or trends that we're seeing too is it costs much more to get a new buyer in than it has a current buyer buy more, right? And so we see brands often in this, they start off the campaign of we're going to drive X% penetration and maintain Y% ROI, right? But then as the campaign moves on, all of a sudden they realize the ROI is below because they didn't take into account how low the ROI is going to be or ROAS is going to be from trying to acquire new buyers. And then the budgets swing all the way to loyalty and retention. It sounds like on your end, in order to maintain both, there needed to be some pretty strong collaboration or alignment organizationally, internally. Can you talk through the process of how you go about that to make sure that everyone's kind of swimming in the same lane, in the same direction, and understanding how to interpret what's coming back in as signals?
Sure. Yeah. And I think we all know as marketers, again, a lot starts with a great brief. And one of the biggest things still, like I hear, our teams or other teams at other organizations struggle with is when you audit, that top part of the brief, after who your audiences are, what are your business objectives or your marketing objectives and your campaign objectives is, what are those KPIs? And you'll usually see in some cases two things, like too many KPIs and goals, right? Or a misalignment between what the primary campaign objective is and what the primary respective KPI is. So like if the goal was increase household penetration, then we'd be looking for, household penetration lift and incremental sales lift in, our campaigns and optimizing accordingly. But if it's, to increase the buy rate, we've got to hit short-term sales goals, and we'd be optimizing like crazy towards certain other segments that would boost the ROAS. And that's really important that we take a look at that, and we have a step, I would say, where we want to force alignment even before someone has to audit that. So in our briefing templates to the brand managers, they're empowered. They want to be authorizing and authoring these briefs before they get in front of the agencies. We just provide a little bit of that guidance in that field, essentially on the template itself. That helps, a lot in terms of us getting things off to a good start. And then I think just as you go through those typical planning junctures, right, there's a major strategic milestone. You look at the strategy plan. Then there's another major milestone, which is looking at the tactical. At those places, you want to constantly be reinforcing this is what you are aligning to as a brand team or product team, right? Like some people are rotating through roles, and they may not always be aware that at one milestone, they're signing off on the audiences that are going to be set up in groups or bought and activated against. So you don't want that, to go unnoticed. Like you have to make sure there's explicit confirmation on a lot of these major approvals throughout the process. And it's important that you have a strong agency team who just reinforces that, has great relationships with the brand and product teams to be able to go through that checklist and make sure the brands and product teams are aware that's what they're signing off on, essentially, not giving the authorizations for.
Yeah, no, I think that's super helpful. And then one other thing I want to touch on, and we're starting to see this again in our data set overall, is clients trying to shoot for portfolio level investment, right? Yeah. And so, I think your Instacart example was great and the results clearly spoke for themselves, but the process to get to it, like as a whole, you hear a lot of advertisers or marketers that refer to themselves as consumer first, right? But they're always brand first and trying to talk to the consumers. What I think is interesting about a portfolio level approach is it really is consumer first, and then you allow the brands to shape that. What are some of the processes, or how do you manage the brand requirements with the level up of portfolio? Like how do those dynamics work, and how do you get past some of the tensions that arise?
Yeah, you're right. It is a balancing act. I think you've got to have really good open dialogue with the brand teams, the general managers and the finance teams, like, and the analytics folks. I generally find, when we bring data to the dialogue, that really helps people make decisions. And oftentimes, going back to some product marketing days from Amazon, there's a mindset that comes from the product teams of ship small, ship fast. So I heard someone earlier say, progress is better than perfection. It's very similar. Like when we want to try to affect or influence optimizations at a portfolio budget level, we will oftentimes go small and bite off things that people will, easily feel more comfortable digesting, because we have a great culture of wanting to encourage agility, testing and learning, taking risks with good judgment. So like, those examples I used before, none of those were more than $500,000 on a $5 billion business. If you come to the table, to the finance team with some great analytics that shows, hey, look, if I make this optimization or I take this bet, here's my forecast. A lot of time I just, say to all of our partners out there, and we have a lot of new awesome emerging partners that we've met through Brand Innovators who will come to us with a proposal, right? And what we oftentimes see is what the input is. If you give me, $500,000, this is what it's going to look like. But what we also need to see is the output. Give me a forecast. What can I expect? Just, simple back of the envelope math. What can we expect? Obviously we need to manage stakeholder expectations, but that is how we were able to, within the same 12 business hours where that Instacart example happened, we were able to just basically check the box saying, hey, look, we're going to move this money from brand level to, business unit portfolio. We believe we'll see a higher return, and it's a limited test. It's a reasonable risk, and no risk, no reward, right? So we were able to move through that one quickly. Other larger big bets that you want to move, like, do require a lot of that getting alignment with all of your key stakeholders first, understanding some of the political dynamics, what are the business priorities and goals, and just mapping it back to those plans. But I really think when you're asking for investments and big investment shifts, you need to have that output forecasted. It's really, really important. Also, I would say just, we have talked a lot about ROAS, and you just mentioned ROI, and that's really critical for all of us in the world touching media, to be able to distinguish that in the marketer's P&L terms. Like we don't go to finance saying, hey, look, I'm going to generate X amount of retail sales. Like they want cash back, right? So we can find out from all of them, and we should all know this, like what are those take rates, or what are the P&L cost of goods sold? What does that bring us down to in terms of the net? And then I subtract my media investment. That gets me to the pure profit. That's super critical. If you can deliver that, you are self-funding, and you will get people behind you who want to invest in you all day long. So that's critical. We show that impact.
Yeah, Mike. Well, I know we're at time. I see David coming on, so I appreciate that.
Cool.
And Mike, really thanks for the time. I think it was really interesting. Again, media buying is so broad, and focusing on some of the main upstream components, and not the administrative, if you will, but the required tactics and the themes that I heard: flexibility, staying on in market, having the right scenario plans, the data assets, and working holistically organizationally. Like, you got to get the foundation right before you can make an impact. And it sounds like you and the teams there are doing that. So kudos, and appreciate the time.
Yeah, thank you so much. It's a great conversation. Hey, David.
Hey guys, no, this was awesome. Thank you both. I didn't want to interrupt. Mike, I think there's something to be said for the value that we all get, for you kind of opening that doorway to give us some insight into the inner workings of the machine, to make the relationships between all different pieces of this media investment ecosystem just work that much more efficiently and productively, because we all have the same objectives. We all can work together to make great things happen. So I think the more that we understand about the nuances and those conversations that go on with you guys internally, the more we could all be better and more productive and efficient. So I love it. Thank you both for your time. Next time we'll be in person, and we'll get you guys a whiteboard. I promise. Maybe a beer or something
awesome.
Too. So I love it. We're going to keep the show rolling. So thank you guys.
Thanks all.
Again.
Thank you.
Awesome. All right, we're going to keep today's program moving. We have Molly Spillman, the Chief Revenue Officer at Oracle Advertising and Marketing Cloud, and we have